everybody? Hump day, halfway through. And boy, as we have talked about, what a critical week this is. Welcome, everybody. Glad you are all tuned in. Would appreciate if everybody could smash that like button. Let everybody know about us. Couple more days here out in Colorado. Actually, that's pretty much where I am, and then I'll be back on the trading floor on Monday. Hey there, everybody. Sandit, Bobby, Guillermo, hey Harris, Doug, everybody, welcome. What is going on today? Well, the market's back around the flat line right now. We were up pretty much all morning. Some news that came out overnight. Rates had skyrocketed again. The 10-year was up around 435. That's backed off down around 426 or 427 right now. Obviously, the market focus was on Alphabet, Google, and does that set the stage for the rest of the big guys that are coming out? Apple, Amazon, Meta, and Microsoft. And we're going to dive into those and what the market is expecting on those here in just a moment. Okay, other things going on here. I was on Schwab Network earlier this morning talking about Starbucks. Okay, and let me just give you a quick review of what I talked about here this morning. This was the position that I talked about. And yes, I am on record on this. This was on live TV. And this was selling this iron condor for $2.25. It's a little bit less than that right now, but my price was selling this at $2.25. Now, why pick this particular position in that price? Well, first off, on the 94.90 put spread, okay, if we sell that at $2.25, then at the end of the week, we have 91.75 as a break even. Everybody can hear me, right? I think Black Lion, I think that's on your end. Everybody else can hear me okay? Okay, yeah, that's on your end, Black Lion. Okay, then on the call side, the 98.102 call spread. Okay, if we sell at $2.25, we've got a break-even end of the week of 125 cents. So this is the range to have this be a profitable trade at the end of the week. If it does break outside of that range, guys, okay, we are limited. Our losses are always capped. Our losses are always limited. We always know what our maximum risk is. Our maximum risk here is the width of either one of these spreads, which is $4, less our credit, or a risk of 175. Now, why did I choose this iron condor looking for a continuation of consolidation, looking for the stock to remain in a range? Well, lots of news in Starbucks recently. Here's the range. And if you guys all remember, about a week or so ago, maybe 10 days ago, actually, I think it was this big dip down on this bar here. So yeah, a week ago, they actually pre-announced earnings. For whatever reason, it was leaked out, whatever it was, they kind of pre-announced earnings. So if you review what I had talked about on Schwab this morning, and I don't want to get too far into it, my take is, what are they going to announce today that is materially different from what came out a week ago? Again, we could be wrong, but the reward to risk on this, I love it. That's why Starbucks. All right, I know you guys are all tuned in, so we can look at Apple and Amazon and Meta and Microsoft. So let's do it. Let's just go. Let's go with the two that are today first. Okay, and that's Meta and Microsoft, the two M's, and then we'll go to the two A's later. Okay, Meta. There has been an enormous amount of call buying, out of the money call buying in Meta over the last 3-4 days or so. Okay, what does that mean? Is that a precursor to earnings? Probably not, to be quite honest with you. Okay, if we look at this chart, we see higher highs and higher lows, very bullish chart. But boy, has this thing already made an incredible run. Can it continue? Sure, why not? Is it priced a little bit ahead of itself? Maybe. Okay, let's look at these call options that I'm talking about, these out of the money call options that have been trading recently, and especially the ones expiring this week. So here we are right here at the money. Okay, and this is volume today in this column, and then all the way on the left here, that's the open interest. So that tells us what amount of those contracts are out there. There is a lot of open interest here at these call strikes much higher. Not only this week, but now I'm scrolling up to next week. Actually, not so much the 8th, but on the 15th. Okay, so if we look at the 15th here, look at these, which were just out of the money a few days ago, and look at all of this call buying right here, guys. That's today. That's not open interest. That's volume today. Ton of call buying. Let's see the stats for today. Call versus put volume and what is typical. Let me bring in my Thinkorswim charts here. And this will be good too, because I can show you all how to find that if you don't know how to find that. Okay, everybody see my Thinkorswim charts on the screen right now? Okay, good. So if you go to the trade tab, okay, up here, and then select today's option statistics. Okay, this is going to show you everything going on today. And we can see call volume is 181,000 contracts, put volume basically 102,000 contracts. So a significant amount still of call buying out there. And if we look for what the average is, if we look for the average here, okay, average volume, it's kind of right in line. About 1.5 to 1 call versus put. Maybe it's a tad higher today. So today's volume may be a little bit more muted in terms of call versus put. Okay, now, how do we go on and identify what may happen in Meta? You all know about expected move, right? You all know about expected move, right? Let's look at what the market is pricing in Meta today. Do you all see it? What is the expected move today, folks? We have to look at the money call and put, add them together. So roughly about $48 or so. It's about 8% move. Okay, so $48, Rodney, very good. $48 from where we are right now at, $5.97 basically gives us $5.50 up to about $6.45. That's what the market is pricing in as to what the expected range would be. Does everybody see and understand that? Okay, so if you were bearish just on an earnings play, I'm not talking about a position necessarily, going out weeks or months. If you were bearish just on the earnings report, you'd want to target 550. If you were bullish, you'd want to target up around 645, because the odds The odds, 68% probability, are giving us that range. Okay, now one of the things that I really first look at, especially when I am very undecided about am I bullish or bearish, is I will look at an iron condor based on the expected move of what is priced into the market, knowing that in this case here again, 550 and 645 were the two key levels. Okay, so if I was to put on an iron condor looking for the stock to remain in that range or using those two pivot points as support at 550, resistance at 645, okay, I might look to an iron condor something like this. Okay, right here. Now, let's say we could do this for a credit of 250. Let's say we could do this for a credit of 250. Would that be acceptable given the reward to risk ratios that we typically look for in an iron condor? Is that enough credit? Is it too much? What does that show us? Okay, the way I look at it, and I did the same thing in Starbucks just now. If we take the short options and add and subtract the credit, 555 minus 250 puts us at a break even of 552.50 on the downside at expiration on Friday. 640 plus the 250 credit puts us at a break even of 642.50 on the upside Friday at expiration. Okay, how do those compare to the expected move? They're both slightly inside. I would like to see them at those expected move prices or even outside to give us a little bit more room. Okay, now the 250 credit would be great because the 250 credit on a reward to risk basis is 1-to-1. We look for 1-to-1 on an iron condor or on any credit type of spread that we put out there. So the 1-to-1 is good, but A, we're probably not getting 250, and B, the break-even points are not quite as far out, meeting what the expected move points are as we would like. Does everybody see that? This is the way that I evaluate whether this would be a good potential setup. Does that make sense? Okay, so at this point, I'm probably not reaching to put a position out in Meta. Okay, because I'm really not bearish, I'm not bullish, right? The charts aren't telling me a lot other than, boy, maybe the stock continues to go up, but there's nothing technical there. And so if I want to use probabilities and technicals, this isn't bad, but especially going into earnings, we don't want to set up that just isn't bad. We need it to meet all of our metrics. I don't see that here in Meta. Doesn't mean we can't find something later on. That is what I see in Meta. Now, how about Microsoft? Microsoft is the other big guy today. Oh, I guess before I do Microsoft, what do I have to put out here, guys? What do I have to put out here today? We've got to get our word of the day today. And our word of the day today is tech. And bear, I would consider a double calendar, I definitely would. Don't really have time to go into that right now, but that would be the next step of what I would look for if I did not have a clear-cut direction. Excuse me. All right. Tech me, please, Gene. We'll tech you. All right. Give you another 30 seconds or so here, guys. Then we're going to dive into Microsoft. Okay. Tech is the word of the day. All right. Let's get Groucho off the screen here and get back to Microsoft. Okay. Now, Microsoft to me is a little bit different than looking at the meta chart. Okay. And here's the reason why. Lots of support at the 50, support dipped below but rallied back, support at the 50, new highs. And then we took a big drop here, but where did we hold? We held right at the 200, held at the 200 again, and held at the 200 again. Okay, Rodney, that would have been a good one. That definitely would have been appropriate today. So for me, if I was going to take a position in Microsoft, which we still might later, I would definitely lean this to the bullish side. Just based on the 200 here really holding. Okay, even though we bounced off it here, and if the stock rallies and it gets past this 443, 444 area here, boy, there's a lot of room for this to run. So let's look at Microsoft. Let's look at what the market is pricing in, what it's telling us, all that good stuff. Okay, expected move here in Microsoft, everybody. Okay, what is it? Okay, stock is 437. Okay, let's take a look at the money. So we've got an expected move basically of about 20 bucks. Okay. Well, with the stock at 437, that gives us a range 417, 457. Okay. 417, 457. Let's go through the Iron Condor setup first. Okay, and then we could look at something perhaps moderately bullish. So 417, 457. So that means on the downside here, guys, maybe we look at that put spread, and maybe on the upside we look at this call spread, and we have this. Those would be ideal strikes based on the 417 and 457. Okay, but I can't quite get the credit amount that we shoot for. Remember, if we're shooting for 1-to-1 reward to risk, and this is a $5 wide Iron Condor up here, we got to get 250. Now, you might say, what if I could get 220 or 230, Scott? What's the difference? Well, you know what? It's a big difference, guys. If we get our 250, okay, we have 250 reward, 250 risk. That puts us right at 1-to-1 on our reward to risk. But what if we cut that? What if we put this on, but we only received 220? Then our reward is 220. Our risk is 280. And look how much that skews our reward to risk. That puts this at basically 0.79 to 1. Now, what does that reward to risk mean? Well, that in the case of the 0.79 to 1, it means for every dollar I'm risking, I can only make 79 cents. Those odds are against me. Those odds are against me. I do not want to do that. Does that make sense to everybody? As much as those strikes work, if I can't get that 1-to-1 or just super, super close within a couple pennies of 1-to-1 there, I'm not going to do it. I'm going to pass, because we will find other opportunities that meet the reward to risk that we want. No FOMO here, guys. No FOMO. So, Iron Condor to me, out. Okay, Iron Condor to me, out. Now, in this particular instance, okay, in the case of Meta, when we looked at it, and we were really, or I was anyway, I don't want to speak for you, when I was like, I don't know if this thing's going up or down, let's look at both sides equally. Here, to me with Microsoft, just given the chart here, there's more likelihood, to me, of a move higher than there is lower. Okay, so what we could do, yes, Aiden, be faithful, be true to the math, exactly. So what we could do in this instance, rather than using the 417 and 457, okay, especially since there's a lot of support right around 420. I know a lot of people are going to say, you said 420. A lot of support around 420 because that's where the 50 and the 200-day moving averages are. What we could do is skew the put side a little bit, meaning use higher strike puts, which will get us a little bit more credit. What do I mean by that? Well, rather than using the 420 and the 415 as our sell, maybe we use 425 and then 420. Now look what it did to our credit. We could probably do that for $2.65. Okay, great. That $2.65 gets us well over our 1-to-1 threshold, or our 1-to-1 ratio that we want for reward to risk. That actually puts us at about 1.13 to 1. Awesome. Awesome. But does that mean I'm automatically going to do the trade? Where are our break-evens? Well, break-even on the downside now is 422.35 instead of, remember we were targeting 417. Break-even on the upside, 457.65. So what we did here is skew this to a little bit of a bullish bias, meaning, okay, upside target break even, fine, great. Downside, though, we're not quite near the expected move. Okay, so we're giving something up there, but what we are getting is significantly higher reward to risk. Is that something we want to do? Maybe, actually. On that reward to risk, maybe we would want to do that. Does everybody see how I adjusted the strikes, how it adjusts the reward to risk, but also adjusts where the break-even comes in relationship to the expected range? Okay, so there's always a give and take. Okay, the take here is that we're able to get more credit. The give is, well, our break-even isn't quite where we want it to be. Okay, so if you were still looking for a kind of range-bound trade but have a little bit bullish bias, this could work. This could definitely work. I want to look at one more thing in Microsoft, though, for a straight bullish play. Okay, let's look at a straight bullish play here. Again, if we're bullish, and we're targeting 457. What if we did something like, boy, that's even really good reward there. Let's do this. Okay, look at this right here, guys. This is something called a broken wing butterfly, BWF. Broken wing butterfly. You can do that with either calls or puts. Calls if you're bullish, puts if you're bearish. Okay? The way you want to set up a butterfly, whether you use a butterfly or a broken wing butterfly, is you always want that sell point to be at the expected move. Because we always talk about what? Where do we want stock to go? Short strike. What do we want the short strike to be? We want that short strike to be at or near what the expected move is. Okay, so here, what do we have? If we could do this, let's say even for $2.50. Okay, what's our reward to risk? What is the maximum value this spread could be worth, folks? And we're going to be closing up the wheel here in a second. Let me post Groucho up here in a sec. Okay, let me post Groucho up here. Okay, guys, last chance. You got 1 minute left here. Tech is the word. Tech is the word. Final call for the wheel like you see in the chat. Okay, what is the reward to risk here, guys, on this broken wing fly? If we pay $2.50 for this, the maximum value, again, we want to look at that right at the short strike. So the maximum value would be $10. Okay, if we pay $2.50, then our maximum reward, our max profit is $7.50. If we measure that on a reward to risk, $7.50. Hey, Michael Clark, please make sure we get Alex Hinojosa in there as well. A late submission into the tech world. $7.50 divided by $2.50 gives us 3-to-1 reward to risk. For every $1 that we are paying, we can make $3. That's appropriate. So if you are bullish, if you want to take a straight directional bullish play, this is not a bad setup here, guys. Okay, when we get finished back off the live stream, I'm going to go back and do a little bit more detail in this. I kind of like that skewed iron condor, but I don't know. We'll take a look and see what we want to do. All right. I know in the promo and in the ads that went out, we said we were going to do Apple, Amazon, Meta, Microsoft, because those are all coming out. But at least we got to the 2 M's, the ones that are today. Tomorrow we'll do the 2 A's. Tomorrow we'll do Apple and Amazon. Tomorrow. Smooth sailing, absolutely. Looks great as long as it goes up. That's why it's a bullish play. Okay, that's why it's a bullish play. All right, everybody understand this kind of the process, at least my process of how I look at some of these things here? Excellent. Excellent, excellent, excellent. All right here, folks. Well, it is about that time. Boy, that wheel is filled today. That wheel is filled today. Oh, a little premature on the drum roll. I think I'm going to have to do that again. Didn't have the wheel up there, and I'm in a pretty happy mood today. I think we're going to go with 2 winners today. So let's get that first one rolling. All right, here we go. First spin of the wheel today. Looks to me like it might be a sand dip or an Arizona Bob. Hey, sand dip. You are the winner, sand dip. Okay, nicely done. Nicely done. Let's do one more today, guys. And sand dip, are you here? You got to be here to be a winner. Are you here? Thank you, R. Will. Hit that thumbs up. Smash it. Sand dip, are you here? Give you 10 seconds to respond. Come on. Can't put your name in and not be here to collect. Yes, wonderful. Okay, we'll put that email address up here shortly where you got to send it to me. Let's get one more here going. All right, let's get one more here. Winner, winner, winner. Just as he just said he didn't see himself on the wheel. Maybe we shouldn't give it to him, guys. I don't think we should give it to him. He was just complaining in here that he wasn't on the wheel, and yet, boom. Look at that. Smooth sailing. What do you have to say about that? Yeah, I'm there. Okay, awesome. All right. Give it to him? All right, we'll give it to him. We'll give it to him. All right. Sand dip. Smooth sailing. Please get me an email. Send me an email with your address and size of your swag to that email address right here. Okay, you're a she, smooth sailing. Wonderful. You will still get the swag. Nicely done. Please email me there. prosperswag@prospertrading.com. Thank you, everybody. Hope this gave you a little insight, at least into how I evaluate looking at potential setups here, especially around earnings. And now you'll know ahead for a Halloween special tomorrow. A Halloween special tomorrow. Amazon and Apple. Have a wonderful, wonderful rest of the day, everybody. We will see you tomorrow.